Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning guest on the program today is Daniel Major. He's the CEO of GoVX Uranium. Daniel, thanks for coming back on the program today.
Colin, always a pleasure to come back and talk to you.
It's a little bit tough to get excited about uranium these days. We were talking before the interview about the fact that uranium's been range-bound between $20 and $21 per pound for a couple of months now, and that leaves a situation where investors certainly aren't excited. There's no momentum, but maybe that's exciting for somebody looking at the long-term picture. What do you think's going on in the market right now?
Yeah, I think jokingly aside, there's a remake of a movie out at the moment called Flatliners about people who die. Starting to feel a little bit on our market like that, but that's not how I'm seeing it long term. I think the long-term fundamentals are still very much there. The market took a bit of a beating over the W.N.A. I think we were looking for guidance from the W.N.A. It came out with a new supply demand model. Basically, I think the positive you take away from their report was, for the first time, they're actually forecasting a deficit. They're taking into account that projects will not get built, and they are showing that from 2020, sometime around 2025, we will have a deficit. And I take that as a real positive because the W.N.A. has not shown that before. So there is now becoming a conscious indication that a deficit is coming. I've done some comparison of, our forecasts and their forecasts, and I have to say the difference between the two is 10 to 15 million pounds in around 2020. That's how tight the situation is becoming between this market going into deficit and this market having a small surplus. So I think, we are getting very tight and very clear that small changes to forecasts and actuals could very quickly turn this market into a deficit and see a tightening of the market. I think it also, while we're range bound, I think it is showing it's unlikely to break to the down. It's more likely now to go to the up because as you look forward, the pressure is more and more moving to deficit. This issue is always when going forward. So I think that's the key. I think a lot of commentators have been talking about the forward uncovered contracts. I think that is going to become an issue, and increasingly so. What is interesting is if you look at long-term contracts, we are now sitting at total historical sales volumes between, say, 2005 and where we are now at half the level they were in the period between 2005 and 2012. You've got an industry that's trading about 100 million pounds of uranium a year and consuming 180. So, a lot of the spot particularly is churn material as well. It's actually about 50% of it. It's actually just intertrading between traders. So it's not a clear guide. People are surviving on their contracts, as we all know. And I think what is interesting for me is that, cost is going, there's been a lot of criticism to the supply side of, why have we not made the cuts? There have been cuts all through the industry, but we've all known that the supply side have got these long-term contracts in place that have been protecting them, and they've been able to, defer decisions as a result. That choice to defer, I think, is getting tighter and tighter. If you look between where we are now, by 2021, you are looking in the US market at about a 25% coverage rate. By 23, that's down to about 10. If you look in Europe, by 2021, you're under 70% covered. By 2023, you're down at 30% covered. So you can see there's an exponential fall off of that term market contracting coverage, and that producers are going to have to put those in place, and buyers are going to have to find new places to come back. And I think the key message, though, is when you look at the cost curves, if you look at the spot market to start with, and we compare that to the cash cost, that's out there. The estimate is 75% of the industry is not making money, would not be making money against its cash cost. I mean, literally cash cost. No head office costs included, no depreciation on their asset, no sustainable capital. If you were just trying to stay alive and you were not replacing or moving forward, you can only 25% of the industry is able to do that. And so for an ISR, and if you took Kazakhstan, for example, that would mean they're not putting their well fields in. They're just sucking down whatever they've got in front of them. If you say, okay, well, there's a term market out that's $10 higher. If you look at it on an all-in cost, you only got 25% again on an all-in cost, just about making money on the term market, with more than 75% of the industry even losing money on the current term market. So you can see the situation, and this is what the supply side has been saying for a while, is guys, this price is not sustainable. You've clearly got with W.N.A that the gap is tightening up on supply and demand. It is going into deficit. We would argue that deficit is probably coming quicker than they do. But at the same time, the crutch that's been protecting the industry is disappearing, and the industry cannot support itself. It's very hard to see where cuts come from, but I think you can also see we're coming to a catch-22 position where if you were to say, look at somebody like Cameco, who've got over 30 million pounds of production a year just from Canada, the industry can't afford Cameco to turn around and say, well, guys, we're cutting production now because we're not getting our contracts, because the price would instantly react. It's that tight on a market. So that's kind of how I see it. And if you look at the projections going forward, and this is where we sit with GoviEx, if you look at the projections going forward, sometime between 20 and 2025, we go to deficit. If you look at the projections of projects, the incentive curve starts at $40. The majority of projects are around the $70 all-in price. And GoviEx's Matajuela project is at around $50. We need to be able to get our project up and running. So all of the things that we've talked about before, Colin, that, we can see the price moving up from here, are still all out there. We're struggling with the waiting game, but I certainly think that it's still coming. Nothing's changed. Despite some of the revised predictions, even the W.N.A are now saying there is a very clear deficit coming in this market. So that's kind of my overview. I think it covers most of what I'd see of the market itself.
Yeah, very thorough overview. Thanks for that, Daniel. The axiom in place that producers can't make money at this price is rather intuitive. If you look at the global cost of production, which you just went over, it's well above the spot price. But things are a bit confusing because you do have that spot price and the long-term price. And further to that point, people have been saying for a couple of years now, these companies simply can't make money at current uranium prices. It becomes frustrating for investors to understand how the uranium price and the associated stocks can stay down so long, and brings into a question kind of the importance of making that argument. Of course, long-term it's important, but how do you kind of get yourself past that point that the same argument's been being used for some time?
A couple of things have happened, that would have surprised us to a degree. I think the one has always been the amount of underfeeding was bigger than we imagined it to be. There was a lot of underfeeding coming through as extra capacity was sitting there on the enrichment side. That market has got the same problem in front of it as well. You have to realize that the underfeeding market, the SUI price is down at around $40 a SUI. I was talking to somebody on that end of the business. They would be losing money at this price. They cannot afford to keep turning their machines at $40. They would have to cut. And once they cut, that capacity goes out. And I think I've spoken to before about this. A lot of those guys put in contracts, long-term contracts, when the SUI was at 140. Those contracts are starting to unwind now. So the enrichment market's in exactly the same position as the primary producing market is as well, that its contracts are unwinding, its spot price is well below its cost of coverage, and you're going to start seeing a lot of pressure there. So I think the problem has been the contractual side of our market. It has just provided that crutch for longer. projects that probably should have been, the cuts that should have come earlier haven't. Companies have been very good at cutting their internal costs and limping along, and I think that's probably the best description of what's been going on here. There's been a limping along, but that ability to keep limping is getting harder and harder as this price has got flattened out at $20. So it is coming. Been frustrating for investors. What we can do as a company is just keep conserving capital, keep doing the things that need to be done to get our projects ready for when this reacts. But I think the one thing that most people in the industry would agree is that when this market decides to respond, it will respond very, very quickly.
And further to that point, it probably the longer that this continues in this downward position, the worse that the situation actually becomes, and the harsher that reaction is going to be when it comes.
Oh, absolutely. And I think the other thing, having been in this industry for a while, and equity markets, it's interesting that when you are in the worst scenario that you think possible, nobody looks at the good news anymore. We saw sort of, 6 months ago, everything was dire. We were all looking forward. It was grim. And everyone just kind of, that we were looking at the good news out there. We were grasping at it and hoping. The opposite is out there at the moment. And I think that's always a sign that things are going to pick up. I mean, in the last month, or in the last 2 weeks, to be honest, the US has gone from being somewhat negative on nuclear to now being pro-nuclear. But the market's not responded to that at all. I mean, Senator Perry's response to support the nuclear and coal industry, the increasing pressure to give nuclear the same support as green energy, the fact that the Vogel nuclear power station has now got government support, that it looks like Scana's reactors are going to get purchased. These are all exceedingly positive for the US market, and it's not feeding through into the sentiment. I mean, in fact, I haven't even seen analysts talking about it, which generally, at this point when everything is so negative, that everyone's just given up. And it's about now that things suddenly explode out. And also I was speaking to an analyst the other day, and he hadn't even noticed the number of approvals that have gone through in Japan for reactor restarts. There's been 6 reactors in the last week that have moved forward one step or more in their approval process to be restarted. No analyst has written about it. And you're like, guys, the momentum's there. It's starting to feed through, but people have become so negative, they're not looking at it anymore.
Yep, the negative sentiment is just about everywhere you look on uranium, either negative sentiment or nobody cares anymore. And I find that to be a very interesting place to get to. And a lot of people are talking about, 2 more years, 3 more years before uranium turns, and they might be right, but oftentimes when you get to that point where everybody's kicking things out a couple years down the road is when the turn actually happens.
Yeah, exactly right. And when nobody can see anything good, even when the good's in front of them, that generally is when it turns.
Daniel, let's talk about GoviEx a bit. The last release that was put out to the market near the end of September was talking about the project getting some interest in terms of debt financing and working with export credit agencies to facilitate getting that debt financing. It's probably a good place to start with the market being so negative. Is there actually interest at this point for some type of secured debt financing to get put together?
Absolutely. I think the couple of things that come away for us is that certainly when, a year ago or so when we were out there talking about our projects, everybody questioned our ability, given where we were and the political risk to get debt financing. And we were always very confident this was doable. And I think we've been able to prove that it is very doable. And I think this is a very positive sign for both GoviEx and for its project. We are one of the few projects that has got a clear path to debt financing in any commodity. And that is really positive. And there are a number of uranium projects getting on, trying to get out there, and they're not really finding debt at all. They're finding quasi-debt, predominantly equity. So I think the debt message is a real positive for GoviEx, that, the banks like what they're seeing. They like the project. They're not worried about the political risk issues or sovereign risk issues. They're comfortable with Niger, and I think that has got to be a sort of a good tick for GoviEx of where we are and what we're trying to do on that project.
Daniel, what other general updates are on the plate for GoviEx? What's kind of going on in this downtime for the market? And also good to point out that despite the fact that many of these uranium companies are back to a 52-week low, GoviEx can kind of proudly say that you've held most of the gains, or I should say some of the gains that you had during that last run up in the market.
We have held, but we're still very cheap relative to our peers. I'll put that out there to start with. On the other stuff of what we're doing, it's still very much what we've talked about before. It's been a little frustrating just getting the approvals in Zambia. Took us a bit longer, but expecting those approvals for the AFR deal, the African energy deal, to come out very soon. We've been talking to the minister. He's ready to sign those documents. That will get that deal closed for us. And then we can move forward on putting the economic studies on the Matanga project together. We're quite excited about Matanga. We think combining those projects with the Africa Energy projects takes the total pounds there to about 60 million pounds. That gives us some real economies of scale. It's a very simple open pit heap leach operation. So I think the market's going to be pleasantly surprised with the numbers we can come out for that one. At Madawaela, we're still working with the government on securing the Agal license. When we can get that, that's got about 20 million pounds of uranium in it, about 4 million pounds of reserves. So that's going to be another big tick for us. What that does more importantly is extends the life of the Miriam deposit, which is our open pit. And obviously that brings in lower cost pounds right at the front of the project. So those are the kind of things to see from us, which is just consolidation, but on consolidating on our projects in a way that adds value to them, not just for the sake of doing it. And we're continuing to work on technologies. I'm still focused on bringing my cost down as a project. For the US investors, just as a sort of admin issue, we will be DTC eligible very soon as well, which will obviously make it a lot easier for US investors to buy our stock.
Absolutely. Well, I will say that while most of the market has been cold on uranium these days, the Palisade Radio audience and network is always asking for more and more uranium info. So I'm happy that you came back on the show today, and I would hope that we can keep doing these interviews on a monthly or at least quarterly basis just to keep an update going. You're one of the most knowledgeable people that we've had on the show in terms of what's going on in the market, and during tough times still seems like there's so much positive going on.
It's an absolute pleasure. And if you've got any one listening who happens to be at the New Orleans conference, I'll be down there. So I've got a booth down there for 4 or 5 days. So I'm around if anyone wants to talk to me face to face and ask some more questions. I'm available down there.
Excellent, Daniel. Good luck at New Orleans show, and good talking to you. Thanks for coming back on.
Thank you very much, Colin. Thank you for the time.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?